Good afternoon, Your Highnesses, Excellencies, friends. It's always an honor and an inspiration to return to a country that I grew up in, that I spent my childhood in, and to witness its astounding modernization and development in recent decades. This is the closing session of the day. We've heard a lot of conversations about the narrow horizons in Western politics, the tensions playing out in this region and beyond. We also, in a previous session, heard some analogies to which sport best describes the geopolitics of the 21st century. Is it sumo wrestling? Is it judo? Is it taekwondo? I have the answer for you. The answer is tug of war. Tug of war is actually the oldest sport in human history. We have been playing tug of war for about 10,000 years. There are cave drawings that you can find in all parts of the world showing how armies used tug of war to train for combat. It is the perfect analogy for the 21st century. Why? In tug of war, the two opposing teams are connected to each other. They're holding onto a rope, and they're fighting for the maximum share of that rope. And today, in a world where we are all connected to each other, that rope to me represents globalization, infrastructure. Think about the tensions in the world today over supply chains and the location of manufacturing, over internet cables and the value of data, about financial markets and the size of global market transactions. All of those are examples of how we are competing with each other all the time. Every day, every country, every city, every society is competing with every other. But most of the time, we are not competing over territory. Right? We can focus on that 1% of activity, of conflicts, actual raging conflicts, such as we do have in the world today. We do have them. But 99% of human activity today internationally is not about war, it's about tug of war. It's about competing over the value of connectivity. What I've listed for you here are 8 or 9 major instances of international conflicts that have been predicted since the end of the Cold War. 27 years since the end of the Cold War. And there could have been major wars over Taiwan, between China and Japan, between China and India, between India and Pakistan. Many potential large-scale conflicts. People have looked at some of these and said, this is going to be World War III. But why hasn't it happened? Is it because we are so enlightened, or is there something else at play? I believe that connectivity, our connectivity even to our antagonists, in the Cold War, the United States and the Soviet Union did not trade with each other, did they? Today we have tensions and rivalry between the United States and China, but they are, of course, among each other's largest trading partners. So we are connected to each other, even our adversaries, whether we like it or not. And that introduces a new level of complexity into geopolitical dynamics, and it shifts competition away from the inevitability of military conflict and escalation into this new area of a perpetual tug of war. And tug of war, I like to think, is a better paradigm because in the entire history of this sport, 10,000 years of playing this sport, no one has ever died playing tug of war. So let us compete. Let us compete actively. Let us compete to win. But let's wage more war, tug of war, than war. What does this look like if you apply it to the map, the cartography of geopolitics today? I will show you. The world has become so connected through infrastructure networks, through trade, that, in fact, for the first time in history, we live in a world where every single continent, every single region of the world actually matters. And it's not in a hierarchical, colonial way. It is with every region of the world freely making new connections with each other. If you pick any two circles on this map, particularly the relationships between developing regions, between Asia and Africa, between the Arab world and Latin America, whatever the case may be, you will witness an astounding rise in the volumes of trade and investment between these regions. And again, it is voluntary. It is on the basis of discovering and exploiting new complementarities that exist in resources, in capital, in labor, in goods and services. This is a very healthy picture for the world. So often, when we have geopolitical conversations, we are looking for who is number one. It was the British, then it's the Americans, who comes next is the Chinese. That's not the lesson of history. That's not where history is going. It is not so easy as saying there is going to be a next number one. This is where I think it's going. It is a distributed picture of world order. As I said, every single part of the world matters. And what you also see here is that there is no one single power at the center. Whether it's Washington, London, even Beijing, no one gets to tell everyone else what to do and what not to do, who they can trade with, who they can't trade with, who they will have a financial or a military relationship with, or who they won't. That's the real world. It's not a world with no power centers. It's not a world of chaos. It's actually a very stable structure. And it's one based on what I call regionalism and reciprocity. The regionalism matters. It's not just about countries. What gives a state power is not just its ability to project its influence around the world, but the stability of its own region. And that matters a lot, of course, here in the Arab region. And what has made Europe an important player in the world, still in the 21st century, is of course the fact that after World War II, it came together into the European Union and the Eurozone. Of course it has its weaknesses, but certainly there is no single European country today that would have the reach and the influence that they have together. So regions matter. Here I show you for every region of the world there are core powers and there are powers surrounding them. And that is really how the world works. So focusing on stability in one's own region is critical to being able to build these confident relationships around the world. Now, because it is what I call a geopolitical marketplace, right? One in which it is impossible to isolate any one state. Again, anyone can build relations with anyone else. The way we have to think about power is not in terms of what one can force the other to do, but what services is one offering the other? What are the utilities in the world that everyone needs? So at the bottom I talk about these. Security is a utility. Energy is a utility. Finance, capital, liquidity is a utility. Technology is a utility. You can get that in the marketplace. You are not forced, whether it is as a country here in the Arab Gulf, or whether it is China, whether it is India, whether it is America, no one can force the other to buy from them. You develop these complementarities, develop these relationships in this geopolitical marketplace. So what is happening in the world is not that one power is dominating the others. Earlier this morning we talked about whether or not China would impose 5G on its neighbors through the Belt and Road, or who will win the 5G race. The answer is not that one will force others to use it, because what we will find is that as technology diffuses so rapidly, we are going to have a much more robust marketplace of providers for that technology. In capital markets, we don't have to use the US dollar. Why should there not be a petro RMB, a petro euro? There will be. It is inevitable. Look at the structure of the relationships between regions. You will settle in new complementarities. There will be new equilibria between each region. Now, let me talk about the economic structure of the world that derives directly from that geopolitical picture. It is, of course, not entirely equal. All of these regions are not equal. They all matter. But we do live in an economically tripolar world. The orange circles represent the greater Asian region, red North America, blue Europe, yellow Latin America, green Africa. Now, the data here is in purchasing power parity terms, PPP terms, which is much more revealing about the actual composition, consumption patterns, and structure of economies than using US dollar nominal GDP terms. What you see is that Asia already represents 40+% of global GDP, an enormous percentage. Not only that, you also see that it is a multipolar region. It is not just China. And I'm going to show you in the coming slides how much more significant than China alone all of Asia is. You will also see that I have included the countries of this region into that Asian space. Why have I done that? Well, ever since the super cycle of the last 20 years, we have found more and more is that the economies of this region have begun to gravitate towards deepening trade and financial relations with countries, whether it's India, China, and other countries to the east of here. And so more and more we will find that this region should be identified, should be thought of as West Asia. And of course, that is geographically where we are. This term Middle East that we are so accustomed to using, none of us here is a 19th century British diplomat, right? Why do we still use the language of 19th century British diplomats? I'm a geographer. This has always been West Asia. And the Silk Roads spanned East Asia to West Asia, and they're coming back. And we should embrace that reality, because that's, of course, where we see so much of the progress coming in terms of building the future world order. Let me show you how that looks like and put it in the context of today's up-to-the-minute trade war. Now, there are a lot of legitimate concerns in the United States and Europe about the ways in which China has gone about accessing advanced modern technology and moving up the value chain. And therefore, there is some consensus in the United States that there needs to be tough action on China, whether it is to limit their illicit acquisition of technology or even to slow this Made in China 2025 initiative. But fundamentally, there is a very, very deep miscalculation at the heart of everything the Trump administration is doing, and it is right here. It is the belief that the United States sits at the center of the global trading system. But as I showed you earlier, it is a multipolar landscape. And it is what is particularly clear here is that actually the United States in particular and North America in general are the least trade-dependent continent of the entire world, which is actually very good for North America. North America has land, it has labor, it has capital, it has industry, it has technology. It doesn't need trade nearly as much as Europe does or as much as Asia does. In fact, Europe still leads the world in terms of the proportion of global trade that it represents. And coming up in second place very rapidly is Asia, particularly Northeast Asia and the Far East. And the most significant trading relationship in the world is not the United States and China. The most significant trading relationship in the world, by a very large amount, is the European-Asian relationship. The center of the world economy is not transatlantic. The center of global trade and the most significant axis of global trade is the relationship across Eurasia. So we have witnessed this biggest shift in the last 25 years from a transatlantic center of the world economy to a Eurasian world economy, which is really what the world looked like to a large degree in the pre-colonial, pre-Cold War, Silk Roads sort of eras that we've experienced in the past. So now, how does this impact upon the trade war? Well, everything that the United States is seeking to limit China from acquiring, other countries are going to seek to substitute and provide. So if it becomes difficult for China to get soybeans from the United States because of the reciprocal tariffs, they will get it from Latin America. From soybeans to semiconductors, what is happening is what I call a permanent substitution. Asian powers, particularly China, are saying, why should we worry about the political risk that comes from export controls imposed by Washington on American technology companies when we can get our semiconductors from Japanese, from Korean, from Taiwanese, from German, from Dutch, or from other companies? And that is what is going to happen more and more. So rather than punish, derail, delay, or limit the rise of China and Asia, what will happen is that the Trump administration is accelerating the substitution of the US by others who are opportunistically seeking to trade even more with China and Asia. And that's what we see happening every day. It may not make the headlines here, but Northeast Asian countries, China, Japan, South Korea, and China and Asian countries bilaterally with the European Union are all seeking to reduce their trade barriers, to link and find those even greater complementarities between their industries. And that will mean that in the next 1 year, 2 years, 3 years, they're going to be substituting more and more away from American goods and products. And that's going to be very problematic, and I think the Trump administration will come to regret it. Now, I've talked about this Eurasian economic system. All of that has been happening. The volume of trade that the European Union and Asia have achieved, $1.6 trillion a year, is before Belt and Road. Before even these free trade agreements and before Belt and Road, there's already $1.6 trillion of trade between Europe and Asia. Now, even a conservative estimate would suggest that by 2030, that's going to be $2.5 or $3 trillion a year, right? As the Belt and Road is built. It has not been mentioned much today, but it is in fact the largest coordinated infrastructure investment plan in human history. That is itself so significant. What I've mapped out here are just some of those corridors, whether it is high-speed railways, internet cables, oil and gas pipelines, you name it. It is so significant because there has been one of the biggest market failures in the world economy of the last 50 years has been infrastructure finance. The World Bank retreated in many ways from this area in the 1960s and has not been filled. And in the meantime, you had the collapse of the Soviet, you had decolonization, of course, which this country has experienced, and subcontinent, India, Pakistan, and so forth, and the collapse of the Soviet Union. On this map, you have dozens of countries that are post-colonial, that are overpopulated, that are landlocked, that are frail, that are poor, weak. And for 60 years, there has not been sufficient infrastructure finance for them to build the foundations of modernity for their people. And that is where Belt and Road comes in. And that is why it is unleashed not an effort to try to contain that effort, but rather what I call an infrastructure arms race. Because now that China has launched the Belt and Road Initiative, India and Japan and the United States and Russia and others are saying, we also want to finance infrastructure. We also want to purchase influence in countries by helping them build their electricity grids, build their railways, build their pipelines, build their cities. Much like connectivity creates a tug of war that is better than war, an infrastructure arms race is much better than a military arms race. In a military arms race, you're talking about rival goods and exclusive alliances. In an infrastructure arms race, you're helping countries build the platform of modernity through which they can trade, through which they can connect, through which they can build multi-directional relationships. So if you were to model out the impact of Belt and Road, here's what we can see. And there's been many, many studies about this now already in just the past 3 or 4 years of looking at the impact of infrastructure projects around the region. First is substantial economic growth. One of the key drivers throughout history of economic growth for developing countries and what become developed countries is infrastructure investment. If you want to predict 5 to 10 years out which countries are going to have a stable growth trajectory, it's most certainly if they're spending, such as India is, 20% of their budget on fixed capital formation. This country, of course, has been the standard setter in that regard in recent decades, which is what has made it such a role model. Now big countries with much larger populations have to do the same thing. But the money has to be there. And now it's not just coming from China, but it's coming from multilateral lending that is now partnering with China to build this map, to build this connected space. Economic growth attracts investment. Some of the fastest growing countries in the world today are Pakistan, Uzbekistan, places that no one wanted to invest in, places with very poor sovereign credit ratings, places with very poor financial systems. But now you have currency reforms, they're attracting investment, there's competition to invest in their stock exchanges, to get into their equity markets. That would not have happened if there was not that foundation of new infrastructure being built that is enabling urbanization, new business formation, and so forth. So there is a virtuous cycle. It is very geopolitical, of course. China is not doing the Belt and Road to be nice, to be generous. It is doing it to diversify its trade routes, to facilitate the inflow of commodities and raw materials and intermediate goods, and to accelerate the outflow of finished goods, of products, to its largest markets, which are, as I showed you earlier, its own Asian neighbors. China's largest trading partners are its own neighbors, and its second largest trading relationship is with Europe. And so it sees that space, the former Soviet republics and Russia and Kazakhstan. It says, how can we efficiently move across them and export faster to Europe? And that's what so much of Belt and Road is about. But of course it impacts on this region. China is building the connectivity through Central Asia to reach Iran, to reach the Gulf, to optimize those relationships as well. And that's a very big part of what people call the new great game. The new great game in the great game of the 19th century was Britain against Russia to try to control and master Central Asia. Today, the way China sees itself winning this new great game is by building these Silk Roads. And make no mistake that for China, Iran is a great prize. And when we talk about Iran, so often it is in the language and the perspective of from the West looking at Iran. Are the sanctions having an impact? What is the Trump policy? And so forth. But let's not forget that for a country that has been at the heart of the ancient Silk Roads, that has substantial trading linkages, in fact, lifelines from Russia, from China, and with the exemptions that have just been given on the oil sanctions that now apply to India, to China and others, that trade continues. So Iran is going to continue to develop, to evolve. Whether there is revolution or evolution inside Iran, make no mistake that with 80 million people and with its geography and with China seeking to build those strong ties to it and its infrastructure linkages also going north, south, and into the Gulf to the east, that it is going to remain a significant power. So here we have to decide, is the Gulf a body of water or is it a wall? And as everyone in this city knows, and the history of this city tells us, it is a trading route. Right? And that's something that the strategy of this region will have to evolve to accept. But make no mistake that this also, in the long run, becomes not just about China, not just about Iran, but about all of the important countries on this map. Now, many people mischaracterize Belt and Road. It's talked about like a Chinese hegemonic plot. And like I said, it was not done to be generous. However, what every imperial cycle of history tells us is that when empires invest in their colonies, when they invest in their periphery, they actually wind up giving countries the tools to resist their masters. If that weren't true, then India would never have become independent from Britain. Britain gave India the railways, English language, right? And all of that helped India resist Britain, right? There is a natural cycle to empires, and it involves making these investments. And Belt and Road will not be an exception. Today you can see already, within just a few short years, Malaysia canceling contracts, Myanmar renegotiating debt, Pakistan seeking to bring in loans from other countries besides China. I travel to all of these countries, and what I find is that there's a common pattern. Their unstated goal is to have investment from A, B, C, anyone but China. They already have so much trade with China, so much investment from China, so much debt to China. They want to diversify. The door is open. The door is open for Western powers, for Arab powers, to build these linkages with these fast-growing countries and to start to substitute and dilute Chinese influence in those countries. And that is absolutely what I think will happen, because history shows in every case of an empire doing what empires do, which is this. That happens. But it is happening faster today. It took hundreds of years for European empires to learn this lesson. China is experiencing this in 3 years. That is the changing nature of the world today. Now, I talked about the Asianization of Asia, the new Silk Roads, the new kinds of connectivity. This has enormous implications for this region already. This slide is not a future forecast. This is today's data. Look at the volumes of trade between the Gulf region, between the GCC countries, and of every other part of Asia. You know your largest trading partners are China and India. Look at the tens of billions of annual trade with the ASEAN region of Southeast Asia, a huge food exporter to this region. And of course, here we're a large energy provider to Southeast Asia. Growing trade with Korea, with Japan, with Russia. Every single sub-region or country in Asia is now trading more with every other in Asia. This is what economics is about. It's about finding complementarities. It's about optimizing land, labor, capital, technology, resources. And that's what we should embrace here. And this is why I talk about West Asia, because the majority of trade of GCC countries is already, it's been this way since the super cycle. Now I call it the Arab-Asian nexus, if you will. Samuel Huntington used to call it the Confucian Islamist axis. I think that was a bit too religiously inflected. And it's not an axis. It is, in the spirit of everything I've said so far, it is a natural complementarity that is emerging. Economic complementarity is flourishing voluntarily. This is a very positive story. The more time that we here spend focusing on how to embrace this inevitable Asian future, the healthier it will be for the Gulf region. Now, what about the Arab world? What about the lessons of infrastructure investment that was talked about very passionately today, something that I agree with wholeheartedly, connectivity, trade, regionalism? It does all come together here. I hate to say it, but I think time is running out to think about the new cartography of the Arab world. Because we're not going to have high oil prices forever. We're worried about climate change. We have states that are very weak and frail and collapsing. These are not perfect conditions. But right now, this country, the UAE, an island of stability in the region, the Gulf countries as stable anchors with wealth and planning their future visions, whether you're planning 2025 or 2030, it's not just domestic, it's about your neighbors. And what I believe is that 1 century on, from the time at which the borders of the Arab world were laid down by European powers, it's clearly time to rethink those borders and to focus more on the functional geography, the infrastructure, the complementarities, the ability to transfer resources, wealth, oil, water, from those regions and countries that have it to those that don't have it. And that's fundamentally what productive and healthy regionalism is about. And we have to see much more of that. Earlier we talked about Egypt and the very important things that are being done for Egypt by the UAE. But that's one country. What about the rest? What about Iraq? What about Syria? We know that war is not going to solve their problems. We know that moving the border from here to here is not going to solve their problems. If you really want to think about a productive future, a connected future, a regional future, it has to be about investing in connectivity. So I use the same instruments here to show you what would a unified Arab energy grid look like? How can we resurrect the railways that existed back in the days of the Ottoman Empire to reconnect countries in this region? All of those complementarities can help to bring about a new kind of pan-Arabism, not the anti-colonial, vitriolic pan-Arabism of previous generations, but one much more suited to the realities, the conditions of the 21st century. The leadership has to come from here. This country really is the unofficial capital of the Arab world. It is the thought leader. It is the role model, right? It is an exporter of ideas, of capital. It has to be a market maker. Asian countries are much less risk averse to doing business in Iraq and Syria. They're ready to do so. They're already in Iran, as I mentioned earlier. They're working with the former Soviet republics in Central Asia. They're working their way westward from their point of view. How can we work together with Asian neighbors to stabilize the most unstable parts of this region, help to build this future Arab map? That leadership, financial, diplomatic, infrastructural, institutional, has to come from here. And it obviously has to be more than what has been done in the last 10 years of suffering that parts of this region have experienced. Last couple of points as my time is winding down. Cities are absolutely crucial. One of the things that you could see from the previous map is that, of course, in the Arab region, it is all about cities. The history of this region is about cities, urban oases and trade routes. Of 400 million people in the Arab world, almost all of them live in cities. It is the most urbanized part of the world, in fact. And when it comes to global cities, as you see here, over the last 10 years that we have been using various rankings and indicators of measuring cities by their importance in the flows of goods, of services, of capital, of people, of data, Dubai has emerged as the newest member of that list. That started with London and New York, then Singapore and Hong Kong, and now Dubai. And that's something that one should be very proud of. To make it into that list of the top 6 or so global cities in the world that are so central to regional and to global transactions is an enormous accomplishment. I put this map actually on social media and I asked people, what do you think the next global city would be? It didn't work because everyone just voted for their own city. So people talked about Buenos Aires and Istanbul and so forth. But really, if you look back at history, it takes so much investment, so much stability, so much vision, so much foresight to get all the conditions right to be one of these stable global cities that the world can count on. And what makes a global city important is that it doesn't view other cities as rivals, it views them as partners. And of course, Emirates Airlines embodies this best, because when a new city is thriving in the world, Dubai doesn't say, how are they going to steal our business? It says, how can we get a flight there? How can we trade with them? How can we connect with them? The mentality of global cities is fundamentally different, and absolutely this city embodies that progressive, sensible, global mentality. Now, Dubai is obviously connected, but it's also more that it is a role model. In the second session this morning, this was what we were talking about. Dubai as a model for how it has used in the last 40 years special economic zones to attract investment and become a hub, how it has invested in infrastructure, how it has invested in economic transformation with services playing a greater role than manufacturing or commodities in the economy here. All of that is absolutely critical. And again, do you see any other Arab cities on this list? Who's going to help them get there? Who's going to teach them how to do it? Who is the role model? It's here. It's not just the reconstruction of the places that are deprived, but even the up-and-coming cities, whether it's Addis Ababa or whether it is Nairobi, whatever the case may be, they're all looking up to Dubai, and it's a responsibility to export that model. I happen to live in Singapore, so I've seen in the last 20 years just how powerful that is. The exporting of infrastructure services and the knowledge of how to run a city is something that's absolutely critical. Now, Dubai is labeled itself a smart city, and I would say it's a work in progress. Even in Singapore and Tokyo, it's a work in progress. But one of the critical things that needs to happen here in order to ensure Dubai's place on this map is to focus on how technology is integrated, making sure that services and that there's transparency over services that citizens receive right in the palm of their hands, optimizing transportation, optimizing utility grids and smart homes. All of these things still need to be done. And of course, people. People are the heart in many ways. The diversity of Dubai is unparalleled in the world. No city on earth has this kind of diverse demographics. But for the future, there has to be a more clear, tiered, segmented, rights-based residency so that people in Dubai, stakeholders in Dubai, most of the residents of Dubai are, of course, not citizens. They're stakeholders. How clear is it that they are welcome to stay? What will incentivize them to invest and to remain and to build, continue to build Dubai as a global city? All of that work still has to be done. The government has played a visionary role, as it has in other places that have reached this level of smart city development. But in the next phase, what about private citizens? What about investors? What about technology startups? And building that ecosystem, which Dubai has started to do, is going to require constant attention, a lot more nurturing and inviting of talent from all over the world to do. So, final point is that where are we heading in the world? Why am I optimistic? I call myself an accidental and inadvertent optimist. I do not want people to think that I'm painting a rosy picture of the world simply because, for normative reasons, or just to be inspiring. I'm not. I'm an accidental optimist. And the reason is because we are building all of this connectivity in our own self-interest. China is doing Belt and Road in its own interest, right? But what the sum total of all of that investment in infrastructure and connectivity yields is a world in which you have less choke points, less single points of failure, less blockages for supply to meet demand, whether it's energy markets, commodities, or otherwise. Traditionally in geopolitics, we worry about the 3 red dots on this map: the Suez Canal, Strait of Hormuz, Strait of Malacca. If there was a blockage of those, blockage of energy, commodities flows, that could be a cause for war. But today, there are many ways for supply to meet demand. Belt and Road is creating those pathways. The thawing of the Arctic ice sheet is creating those pathways. There's no reason for there to be a single point of failure in the global system. And that applies to these fixed infrastructure assets like pipelines and railways. It also applies in technology and data. We have hundreds of internet cables wrapping around the Earth. There is no way to stop the internet. It is something that actually is very, very robust. It is, even in the words of Nassim Taleb, it is anti-fragile. It gets better and stronger over time. You can cut off one internet cable, 2 internet cables, the internet will still persist. Even if you invented the internet, you can't stop the internet. Globalization is like that as well. Globalization is anti-fragile. It gets better, stronger, bigger, wider, more inclusive over time. It includes every single part of the world today, as I showed you at the beginning. So we are moving towards this anti-fragile system. We're moving towards this connected system because we are building it. And again, we're building it as countries, the way China is doing it. We're building it as cities, the way Dubai is doing. So that is why I'm an accidental optimist. So my concluding messages for all of you is that let's focus on war, but let's focus on tug of war, the war over connectivity. How do we win that? That is what determines the winners and losers in the future, much more than any kind of conflict. Secondly, regional aggregation. You cannot be a successful power if you are not in a stable neighborhood. It drains your energy. I thank you so much. It's been an honor and a privilege to be with you. Thank you very much. Shukran. Thank you. Thank you.